Palantir just mentioned. We are top ranked in the AI stuff.
Just unusual.
We're live. Hello, everybody. Welcome back to another episode of Palantir Weekly. This is number 101. We missed last week, and the Twitter fingers started running of everyone who was complaining that we don't put in enough work to make sure we're consistent every week. We take 1 week off, and everyone gets mad, but we're back. And we're going to discuss all the stuff we missed last week, like the NHS deal. Got a lot of stuff to talk about there. S&P 500, breaking news. We are not getting in 2023, which I think I kind of expected. But in general, I mean, 2024, it's likely going to happen. But so far, 2023, it's not going to happen. And then we just got a bunch of other stuff going on in the market that we'll be discussing that impacts Palantir. I have Arnie with me, Vince with me, Matt Money with me, and Amir. This guy's on Twitter, does a lot of good financial breakdowns. He's never been on a weekly episode. I did an interview with him, I think like 3-4 months ago now. We got 3 Europeans here. It's 4 a.m., 5 a.m. for all these guys. So we're forcing them to wake up early, but they're here to talk about Palantir. Amir, are you excited to be here?
You know, I was the one that when you didn't do the weekly last week, I was like, I mean, what the fuck? We have the NHS. We need to talk about this. So I'm one of the guys in the chat that was upset. So I'm happy to be here. And
he went on a date. He went on a date.
That's true. I did go on a date. I had a hot date. I had to go on.
Yeah, I saw that. I'm so happy for you.
All right. So thank you. I appreciate that. So let's start off with Shyam's latest interview. For those that didn't get to see this, 5 minutes on this, I think is really good. And then we'll get everyone's raw thoughts to it. Just was on CNBC today. Karp is at the Reagan, I think, Defense Forum is what it's called. It's in California. I actually went to that library in 2016. It's a really nice library, and he'll be speaking tomorrow at 10 a.m. And Karp is there as well. And he came on a flight from Tel Aviv to California. So let's see what you have to say for 5 minutes. Then we'll get into it.
Hey, thanks for being here.
Thanks for having me, Morgan.
You do have technology deployed in Ukraine. You also work very closely with Department of Defense here in the U.S. and other government agencies. Is your software being deployed to Israel too?
Yeah, absolutely. I actually have come to Reagan from Tel Aviv. So we are proud, we've been unequivocal in our support for Israel and their right to defend themselves against these barbaric attacks. And we've worked in Israel since at least 2014.
Okay. I mean, we talk a lot about demand for hardware and weapons and munition stockpiling, et cetera. Are we seeing the same sort of demand for software and technologies?
Yeah, the need to make better decisions quicker, that are more precise, more protective of civilians, that enable you to take the advantage over the adversary has never been more clear. We've seen that play out on the battlefield of Ukraine and how asymmetric that capability can be. We're seeing it play out in totally different domains like Israel now. And there are a lot of lessons here that I think are going to apply as we think about the Pacific theater.
Okay, lessons like some examples?
How are you going to fight in a coalition environment? You think about, of course, Israel has to do so much, but we're supporting not only Israel, but also her allies. How are allies involved? There's the logistics and supply chain element of this, but there's also the broader collaboration, situational awareness, the evacuation of non-combatants. We have to bring all of those things that we really started learning since Afghanistan to bear in the next theaters that provide geopolitical challenge for us.
And of course, Palantir is a dual-use technology company, really one of the first ones to the public market. So you work with government. You also work with commercial and private sector as well. And you're also one of those companies that has been working on developing and deploying AI for quite a number of years now. So as other companies are thinking about investments, you're already monetizing your investments. These AIP bootcamps that were talked about in the third quarter earnings, these artificial intelligence platform boot camps. I think there had been an expectation that maybe you would sign on 140 companies in the month of November to these boot camps. I guess walk me through what they are and how many companies have shown interest.
Yeah, so these boot camps, we've rebuilt our entire go-to-market around it because it's really this magical experience where you get your hands on the keyboard for 8 hours and you leave that experience with a production-ready use case. And with even more than that, a deep and intuitive understanding of how do you apply this technology to get real results. More than a proof of concept, actual proof that you can take to your enterprise and get results. And so this has been a profound change for us. And we ended November, we thought we'd do 140. We did it for 200 organizations. We're on track this year to serve 325 organizations with boot camps. And we've really focused on commercial so far this year, particularly focused on U.S. commercial. Next year and into December here, we're really going to be bringing this to the U.S. government as well.
And we saw it in the third quarter reaccelerate growth on the commercial side. It also, I would imagine, lowers your marketing costs and creates a stickier environment in terms terms of more companies coming on board. Is that what you're continuing to see?
We're continuing to see that. I think one of the most profound effects of, let's call it 2023, the year of reinvention around ChatGPT, is the expectation that software is actually going to work and the accountability that's around that. So people want to leave with 8 hours of effort realizing they can put something in production.
I do want to talk to you about something else that is on your website, but I don't know that it has been discussed very much publicly yet, and that is Palantir Web Government Services. Is this a new business strategy for Palantir?
Yeah, the idea is, we were one of the first defense tech companies. We spent 20 years kind of building this wormhole between modern American software and the Defense Department. And there's not just your product, there's all of this software infrastructure you need just to get to the starting line when you're dealing with an institution like the DoD. How do you get on their networks? How do you deal with accreditation? How do you get to data? We now have $100 billion in capital deployed through VCs, hundreds of new entrants in this category, which is so exciting. I want to help them succeed. And uniquely, Palantir has spent the last 20 years banging our head against the wall, needing to develop technologies that I know they're going to need to get to the starting line. And so Palantir Government Web Services is really about bringing that to them, helping them succeed faster, bend the revenue curve, bend the cost curve, get to that next round and survive the valley of death.
I mentioned the fact that you're already realizing returns on all of your AI investments and software investments. You've had 4 quarters of profitability. You're now eligible for possible entry into the S&P 500. Are you expecting that? Are you gaming that out? What would that mean for the company?
I think it's one of the things you can't really have expectations around. But what I think it would mean for the company, and actually more importantly, the broader defense tech ecosystem, it's been 45 years since an actual defense company, one not born out of mergers and spin-outs and other financial engineering, but a new venture formation has been added to the S&P 500. The primes, they were added on March 4th, 1957, which is the year that the indice was created. So that doesn't feel like American dynamism to me. I think it feels more like the sclerotic nature of European capital markets. And I think we should bring the best of America to this. And I hope we would be the first of many of these hundreds of defense companies that have an opportunity to participate.
Shyam Sankar, it's so great to speak with you. Palantir Technologies, thanks for being with me here at the forum.
So that was pretty cool. Let's start off with Matt. Let's start off with your thoughts. I mean, you can give me your raw thoughts, but obviously he talked about Bootcamps. He talked about S&P 500, first defense contractor since 1957, outside of the major ones when the industry was formed. Thoughts on that interview and anything he had to say?
Well, I thought it showed up very strongly. I think one of the things that a lot of people continue to, I guess, poo-poo is the role that Palantir is playing within just Western defense in general or NATO allies in general. And whether I don't necessarily believe in what's going on, I don't want anybody to be fighting personally, but at the end of the day, I can kind of understand where Palantir fits into this, because obviously this is helping with stability in the nation or stability in the region, to be able to kind of make sure that they have the wherewithal to be able to survive and keep Israel kind of safe in that sort of environment. So there's that piece, although I'm not necessarily for war. It's unfortunate. And at the end of the day, they're helping at least try to keep stability continuing in that area. The boot camp thing is something we've kind of touched on a lot of times. It's nice to hear Shyam show up. And just a side note, I think a lot of times when we were thinking over the past 6 months that Shyam got moved to a CTO position, I think a lot of people thought he was kind of taking a demotion because of what was happening with the SPACs and everything the like. I really think that this allows him to showcase more so his ability and his front end push towards being the visionary leader and the follow-on leader that, in case of CARP, in terms of succession, needs to step into place. I think this is really cementing him in there. So I just wanted to kind of put that little piece in there with respect to Shyam as kind of bring himself up to be the second in command at Palantir, if anything where it would happen at CARP. But the bootcamp piece, I think, is absolutely phenomenal. It's one of the things that I struggled with in terms of going to market and being able to get clients and perfecting that has been absolutely phenomenal. And I saw your note earlier, Amit, with respect to the S&P 500 piece, which I won't spoil for everybody. Maybe I should hold that off for a different topic, knowing that you're moderator and probably will lead us that way.
All right. Amir, let's have you make your first actual segmented appearance on the podcast. Give me your raw thoughts from that interview. Any takeaway, any hot takes, and you kind of agree with Shyam that they are on the right trajectory to get into the S&P 500?
Yeah, first of all, I was wondering if they were recording that in Sweden, just looking at how cold Tencent, like scrunched up the interviewer seemed. But all in all, nothing too new. We knew about Israel, we knew about the boot camps. But the question is, did everyone listening know? I always appreciate when they do mainstream media appearances. We've had a really cool down period in terms of that. Last year, by this time, we saw Alex Karp actually making a lot of appearances. So I'm happy to see that they're picking that up again and actually talking about their company. But what really got me curious is when he got to the S&P 500 inclusion talks. We know that some companies can be expedited in their process when the companies go in front of a board and the decision is made, and they're really making their case that, well, this inclusion would be very important from multiple aspects, not only the market cap, the profitability, but actually the implications of the type of company that's being included. Where you mentioned that we haven't seen this type of company being included since the actual formation of the
industry. Yeah, it's a big deal.
But what really got me curious is, what does S&P inclusion actually mean? I would like to talk to some indices experts to understand the actual dynamics, because just looking at the capitalization of the S&P 500 ETFs, that's roughly 1.2 trillion, I think.
Mhm.
Just looking at SPY, VOO, the iShares one, whatever. And then look at a company that's roughly 40 billion. The weighting of that is 0.07%, which in turn means 8.4 billion in the distribution of that 1.2 trillion. But it can't be that simple, because that would mean an endless loop of market cap boost, because
Right.
8.4 billion distributed to a 40 billion company, I mean, that's a sixth of the market cap just from being in the indices. So I'm really curious how that actually works. I haven't really studied up on that. I've never been in a company that's gone through an inclusion, so I never really had an excuse to dive deeper into that, but I'm really curious about that.
I think, Amir, that some of those 8 billion is already in Palantir. And I believe this Kostadin, he's a frequent commenter to the show. He has done, I think, a video on, he deeply studied what it means for companies, like what is the effect that it creates on companies. But I think your logic is correct, but I think some of that money is already in Palantir.
Okay, Arnie, your raw thoughts on this interview?
Well, just let me attach a little bit to what Emir just said. I think you should not think of this loop for the simple reason that being included in the index doesn't automatically you unlock this perpetual stream of money going that. You have a lot of money being thrown to the stocks that belong to the index, but at the same time, you have other guys that maybe just leave the stock. What is true, like necessary true, is that being included in the S&P 500 gives visibility. Then you also need to think of how most indexes are actually, how most ETFs are actually built. And basically, in order to replicate perfectly the index, it is almost useless for many ETFs to actually invest in all of them every day. So what they do is something called principal component. And basically, rather than investing every day in the all 500 stocks, the index basically, the ETF basically put the flows into the companies that really matter to move the ETF. So these are actually also to save cost. That's the idea. More getting back to Shyam, I loved the questions related to bootcamps. The interview was more focused on defense, but the fact that they showed confidence in the bootcamps and in the forward trajectory of the bootcamps. Now they are on track to deliver 325 bootcamps. I understood that number is in total, hinting that even in December, we will keep doing more than 100 bootcamps. So that is actually a very strong number, because true, so far, bootcamps are mainly related to existing clients, but after all the existing clients are covered, if they can keep this pace of, let's say, 100, 150 bootcamps per month, and potentially this can increase as Palantir grows, that intrinsically means that we can move way above the 100, 150 customers per year that now we have been accustomed to. So this dynamic can really change everything. And then just to underscore what Emir said again, I think it is really peculiar that if Palantir enters the S&P 500, it doesn't really matter when. It is more important getting into. That can stimulate a lot of these startups that are in the defense tech space, which is under the light right now. With the IPO promise, these companies are incentivized to receive a lot of funding because they see an end goal. And Palantir would be like the benchmark for these companies, in the same way Tesla was for the EV revolution. So I'm very excited for that, because that means Palantir is in a position where it clearly becomes the leader of the sector.
Okay, Vince, any thoughts on the interview?
So to not repeat what anybody has said, I will just go to a very interesting point. Palantir has been very annoyingly holding their cards to themselves. So it makes me think that if they disclose how many AIPs they are doing and they're actively bragging about it, they really better come in with super good numbers on earnings. Otherwise, they're going to crash their stock. And using reverse logic of how Palantir has been acting, I would guess that they are getting really, really good numbers, because we still don't know how these AIP people are converting. Are these people becoming new customers? And the fact that they're confidently disclosing how many people they have in the funnel, it makes me think that they are going to come in with very, very good numbers, and they better do, otherwise they're going to crash the stock. Amit, you're muted.
Sorry, I was muted. I think the AIP bootcamp expansion was really interesting, going to 325 or being on track for that. Let's get into this conversation now, because this is a piggyback off of basically what Shyam was talking about, or at least what Vince, you said in terms of what needs to happen for the price to be justified. Let's talk about valuation now at $20. We've been holding 20 for, I think, 2 weeks straight. I think we closed over 20 for the first time in a while. Amir, let's start with you. How do you feel about Palantir's valuation? And I want you to be ruthlessly honest, because that's how you are in our Twitter group chat. How do you feel about Palantir at $20?
You want a short or
no? I want a long answer that is ruthless and to the point.
Well, there isn't really a to the point answer, because valuation, looking at Palantir, is anything but simple, because we have so many unknowns and we have a lot of contradictions. Just looking at the company baseline, when a company is new, the story is the most important aspect. Just twisting the story can 3, 4, 5x the valuation compared to something else. So a common example is looking at Tesla. Tesla being seen as an auto company, or Tesla being seen as a tech company, which would warrant a higher multiple, right? And when a company is more mature, the valuation is more driven by objective factors like data and numbers, because the company is what it is when it's mature. As Damodaran says, you can't read a 40-chapter book to chapter 39 and suddenly switch out all the characters and change the story. So the question is, which one is Palantir? We know it's a 20-year-old company, but the business model itself is very young. So we're still in the story phase. And what do we need in the story phase? We need a storyteller. And to me, Karp is a really great storyteller. He's the visionary that Palantir needs right now. But we're clearly riding an AI wave. So does this mean that Palantir warrants a higher intrinsic value because it's still exciting and new.
So
Well,
you think $20 is stupid for Palantir? Who's buying the stock then? I mean, I get your point about stories and valuation, but on a numerical level, do you think $20 makes sense?
It makes no sense to me. You know, we see people discuss this. Well, they just dropped AIP. They just changed their whole go-to-market strategy. Well, my valuation already has them changing their go-to-market strategy, because if they were stuck in what they were in 2021 and 2022, the company was going nowhere. So my valuation of the company looking 5 or 10 years out, the intrinsic value already encompasses them fixing the go-to-market strategy. You know, we have the NHS deal, for example. People are like, oh my God, they got this procurement. But the valuation already implies that they're going to get that procurement and then some. So I can't really twist the numbers and make it make sense. But still, there's still an unknown. You know, when Palantir was in the 6s and 7s, 100% of my portfolio was in Palantir, because there was an asymmetry there between the intrinsic value and what the stock was trading for. I mean, there was a lot of margin of safety, so it wasn't really that risky to me. But now when we're in the 20s, the stock price implies so much growth and so much expansion. And we have this uncertainty because we don't really know what will growth look like with AIP. What will the margins be? We simply don't know. And when we don't know, we need a bigger margin of safety when we are evaluating a company, which means the cost of capital needs to be higher. So it makes no sense to me currently.
Vince, Arnie, anyone want to follow up on that?
Go, Vince.
Well, I actually had a question, because we had a reverse. It's so good that both of you are here. We had a reverse DCF that was done by Arnie, and we had a model which I really like that Amir did on Twitter, where people had to vote on what they think, like what they and those inputs were used to come up with the valuation. And then people got really pissed on how Amir is thinking, which was really funny because it wasn't his thinking, it was the people's input. And what I wanted to ask is, he got very similar inputs to Arnie, and I didn't really have time to go into it. But Arnie, what do you think that it's like? What is the difference between yours and Amir's calculation? Because there must be, because you have very similar input in your reverse DCF, and your price is $18.
They're not very similar. And I replied to your tweet with using Arnie's assumptions, and the result was pretty much the same.
Did I miss something? So, I had a very, very busy week, so I might have missed your...
No, it's the same. There is one difference between mine and Arnie's, is that I took the share count end of period, while Arnie did it year by year. So you do the discounted cash flows per year. I just took the end of period, which is incorrect. It doesn't change the result that much, but yeah, it's pretty much the same, and the inputs are wildly different. And as you said, it was really funny how people got upset at me, like, oh no, it should be higher than this. I'm like, these are not my assumptions. I asked you guys. I made calls for all these inputs.
You know what is different between this model that I'm looking at right here on the screen and a normal model is that in a normal model, we don't have all these fucking commas where there should be periods.
Yeah, that's the one. This
is like, I just don't understand why you Europeans are using commas.
Wait.
You don't understand why the US is
it's 12,79 a share. What the hell is that?
You are a minority here.
Let's not get into the metric system.
I'm just like, what is this? What am I looking at right now? Like,
it's called science. Science is based on the metric system, and it's 10, no.
All right. So yeah, I think we have some people. I think all of us on the panel think the valuation is getting stretched a little bit, but all of us also recognize that it's a story, and that story is being told really well. Snowflake was up let's do a little bit on Snowflake. We don't have to go super deep into it, but they were up, I think, 6 or 7% today, $60 billion market cap. Matt, your thoughts on Snowflake and their earnings? And
let me ask everybody else. Did anyone else go through the earnings, or
I know top line metrics, but that's it.
No, I didn't.
No. And
I
Arnie?
saw your video on it, Matt. So my answer would be what you are
Then,
saying.
then speak to it. No, you're good. No, I'm just kidding. So yeah, I think with that, we're in a similar space with Snowflake comparatively to Palantir. Both are overvalued. I would say, just looking at the numbers here, knowing that Snowflake has 3 times the amount of share-based compensation on a quarterly basis than Palantir does, and yet Snowflake's valuation is so. Therefore, that said, they're not net income positive on a GAAP basis. They're still losing $200 million on a net GAAP basis, net income GAAP basis, whereas Palantir is generating income. So to me, it's not necessarily understandable as to why Snowflake is being higher valued at the moment, other than the fact that if you were to compare fiscal year this year this year revenue, comparatively, it's 2.65 billion for Snowflake versus 2.2 about is what we're going to get to in Palantir. So they're about 20% higher revenue, but they're obviously not making as much on a net margin basis. So in that respect, to me, it's just not really understandable as to why Snowflake might be getting a higher valuation. Year-over-year rate from last year to this year is supposed to decline to 37%, and that was 70% the year before, over 100% the year before that. So they are becoming more and more like a Palantir, where their growth rate is slowing down pretty significantly here. Their customer counts are very similar. They're growing about 50% year over year. So in that respect, they're doing very good. The thing that I think is confusing to me is, let's just take a 5,000 step foot back, right? They're anticipating for the next 5 years, they're going to be able to grow at a 30% compound annual growth rate, to the point where in the next 5 years, they're going to be making $10 billion in revenue as their top line numbers. And they anticipate that their net income is going to be 25%. So they're going to be making about 2.5 billion on an adjusted basis, right? Take into account, if they keep their share-based compensation the same, let's just call it $1 billion, right? They are going to walk away with $1.5 billion on a net GAAP income basis, right? $1.5 billion. So you get 25% net margin. You have $1 billion of share-based compensation. So that goes from 2.5 to now 1.5 billion. Now, if you look at the stock price of, the market cap of $60 billion, and you divide that by 1.5 billion, you're looking at a price to earnings, not today's valuation of 40 times, but in 5 years' time, a price to earnings of 40. Wow. So you're not just talking about today, right? Because obviously you can't have a price to earnings because there is no price to earnings to be had. But if you even look 5 years into the future, after a 30% compound annual growth rate, you're still at a price to earnings of 40, which is very, very stretched.
So you're saying the market's pricing in 5 years of growth today?
It has to be pricing in either the fact that they think it's going to continue at a 30% or 37% compound annual growth rate, or they just think that Snowflake is that unique of a company where evaluation doesn't matter. And Palantir is in a sort of similar situation, right? Palantir is very expensive as well, just like we've been talking about. Is it $12? Is it $18? Either way, it's expensive, right? On any sort of metrics that you kind of put forth. So they're evaluating these companies probably on their artificial intelligence potential. And maybe, and then a point that Chris brought up when I was talking about it the other day, I think he just didn't want to talk about it because he didn't get into the numbers, and I was getting into the numbers. He thinks that there's something else going on at Snowflake that has institutional investors secretly wanting to hold the company. Versus why aren't they holding a Palantir, right? You have some small institutional investors, but not to the extent when Snowflake IPO'd, everybody and their mother was trying to get involved. If you right, Warren Buffett, even.
So you think, hold on, so you think Snowflake's basically like Jeffrey Epstein, and they have dirt on everybody on Wall Street?
I can't speak to that. I don't know, but there has to be something. Chris is convinced that there's something out there that, whether it's the fact that they think Slootman's a better salesman than Karp, what have you. But to me, it's a less profitable business to the point where they're not even making any money. Their share-based compensation is 3 times the amount of Palantir's.
Yep.
And they're more expensive. So, but I think in the long term, the net income margin is going to be very similar, and the free cash flow margin is going to be very similar for both organizations at about 25% and 30% respectively. So I think it all at this point just depends on who gets the market share and who ends up winning.
Well, you said Snowflake did the IPO, and I would underscore that doing the IPO has the consequence of, imagine you have all the big banks that were involved in the process, and basically Snowflake involved all of the big banks to make this process, and basically that meant you had these banks going through all the asset managers, explaining the story of Snowflake, why Snowflake was cool. Imagine after 3 years of education of how the company is, why it's cool, blah, 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 the institutional investors understand what Snowflake is. And actually, Snowflake is a way easier company to understand, at least to grasp as the intuition, rather than Palantir that has now two souls, 3 key products, expanding even more. So there's a lot of complexity there. And before, Amit, you asked, okay, but who is actually buying this Palantir at $20? And here is the answer: institutional investors that previously were kind of skeptical, but initially, so basically in the initial stages, we were all retail jumping in. Maybe we were even too early. Then gradually we see this chart increasing up to this recent spike that is a hint. Now institutional investors are waking up. Okay, I want AI exposure. What's the best way to have it? And as Daniv's underscored, Palantir is the purest AI play. In the same way, if you wanted to have exposure to the electric vehicle theme, you don't buy Stellantis, you buy a pure EV play. So that's the idea that helps institutional investors now appreciating Palantir. GAAP profitability helps, but I would say the fundamentals so far, as Matt underscored, right now of Palantir are pretty interesting. If we exclude the valuation, I think we already have a very good looking company in terms of number. And what's best is that with this simple but dramatic change, Palantir really changed everything. Why? Because in 2020, the sales cycle was around 6 months. So imagine, just to get one client, to get that one, pluff, 6 months of pilot were needed. 6 months. So that automatically means that even if you have a lot of engineers, you can't really get so many clients. Then 2022, 2 months to get a new client for average. These numbers are from documents of Palantir Foundry. And now 2023, 5 days or even less to get a customer. How that changes the dynamic. Not only each client can be acquired faster, which means you get the first, let's say, 1 million, 5 million earlier. But if you are actually faster in getting the customers, you have 2 consequences. The first, you get more customers, so you start monetizing earlier, okay? So which means you can get a lot of revenues faster. But imagine if in 1 year you get 300 customers rather than getting 50, after 5 years, this effect compounds dramatically because all these 300 customers acquired actually scale. So we are in a weird position where it is true, like purely from a financial numerical standpoint, Palantir is expensive. Yet I would say I see the underlying dynamics really changing. Without AAP, these numbers, like a 30% growth and blah, 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 I would say that would be very hard to obtain. But now the company has shifted they have a different standing. I see a dynamic of institutional investors wanting AI exposure. Everybody wants to invest in AI, but once everyone wants to invest in AI, that creates an automatic loop also from the corporate side, where all the CEOs need to have some AI in their companies. I've not followed much Snowflake because, I mean, it's interesting, but to me, it's not a company that really tells me the story that I want, like the real information. I think a better group of information comes from the pure subscription businesses like ServiceNow and Salesforce. And what's here interesting is that Salesforce earnings call was extremely focused on AI. So Salesforce is focused on CRM, but they have some AI solutions that are incorporating in what they do. They also have data cloud service. They have data analytics. So they're trying to go into the Palantir direction slowly, and they're receiving a lot of good feedback. They are closing a lot of deals, and even if the revenue growth is like 10%, what they really got the market interested is this number of the total remaining performance obligations growing 21%. Basically, this is a sign that the business is accelerating. And if we contextualize this with how the software market is going on average, you see here, for instance, the median net dollar retention numbers are still relatively weak, but we do have signs of acceleration. So an acceleration that so far is backed by a story, which is nice, but also backed by the financial numbers of Palantir already improving. If they rise the guidance, again, to my eyes is a sign that, okay, this thing is really rolling. And we have signs from the sector like Salesforce hinting that, okay, this demand is real. So right now, I would say the company is expensive. The story is getting better and better. I'm just here waiting for what I call a stupid crash, because that would make me happy. But otherwise, I just let this story unfold.
No, I think that's really solid by both you guys in terms of what's going on with Snowflake. Obviously, their growth a couple of years ago, I think, was like 60, 70%. Now it's more at 34%. So there is declining growth, but that growth is better than Palantir's. And even if we don't think there's a super amazing moat, they do have a massive amount of distribution that Wall Street seems to be liking a lot more than the mysteriousness of what a Palantir could be. Go ahead.
Okay.
No, you got it. Go ahead.
No, I was just going to add to the argument that Arnie had, the IPO versus DPO route. I actually did some numbers on the analyst consensus of Snowflake. And it really, showed me how dirty the whole industry is in that regard. Because looking at the consensus from the actual analysts that put out the price targets, if you compile those numbers into a model, you would get an intrinsic value of around $40 to $50 per share. But their actual price target was 180.
Right.
And I'm using their numbers, which means that they're really bending the numbers. And Arnie touched on why that is. Why would they do this? And it's simple. If you sell the story to your clients at an IPO price of 120, you can't just outright now change your mind and say, well, it's actually only worth 40 to 50. You need to do everything in your power to justify those numbers. So that's why we see this completely different dynamic where Wall Street has no incentive to push Palantir up, but they have huge incentives and towards their banking clients. So they're not seem like, yeah, we scammed you guys, basically. But, in general, just looking at the growth by itself isn't very telling. There's no value, but just looking at growth rates, it could be very impressive for a company, but without providing any actual value to the shareholder if it doesn't earn more than it costs to raise it. So questions like, are they delivering growth efficiently? What are they giving up to reach that? You could, for example, just acquire companies, pay huge prices, and you will have a terrific growth rate. And some people that only look at something like price to sales will actually miss that and be deceived by that. But by understanding how much is being paid to achieve growth, if it's being done efficiently and sustainably, and in Palantir's case, the scalability of it all is where we actually can extract value. And Palantir has demonstrated actual organic, responsible growth as opposed to something like a Snowflake, for example. So that means a lot in my eyes as a shareholder.
The same.
I'm curious how you could say that one is more or less responsible.
Well, if it's organic, it means that it's more sustainable for the company, right? You're not actually losing money to grow top line. And you actually, when you look at the margins that you can get out of that growth, it shows you how responsible you are being as a company. Because if you're actually losing a lot of money and increasingly so just to grow that top line, it's not very sustainable. It's very irresponsible, is what I mean.
I also just want to add something, because we're a group of retail investors, right? And we basically do stock picking, and we wouldn't invest into something with a small upside, right? And then I feel that our group is struggling to understand what value other people can see in Palantir at this price level. And yes, like, we are not buying at this level, but we're not selling either. And I think that there's a lot of people who invest to, keep up with the markets, or, just slightly beat the markets. And, they want to really diversify their portfolio, and they're happy with the 10% per year return or 9% per year return, because that beats the S&P by 1 or 2 points. And at that point, if you extrapolate that Palantir and Snowflake is going to be super valuable in 5 years, and you want to be in the AI, Palantir can still be a good buy at this point, because you will get a 9 to 10% return per year, and that somehow still makes sense. But we are here and we put in all this time and effort to really get exceptional returns. And yes, Palantir undeniably is not at that level anymore, unless something major changes.
I got an interesting question. Someone on Twitter told me that, well, if you're holding Palantir at 20, it also means you would be willing to buy it at 20, because you actually own the same amount. So what's the difference between being in it and buying? Because you're still expecting upside.
Yeah, makes sense.
And there is this contradiction. Asmoderan spoke to it in terms of him holding NVIDIA. And he held it since 30, and it's now for whatever it is. I don't know the exact price today, but his take is, yes, NVIDIA is expensive, but there's a contradiction. There's a huge difference between new decisions and already past made decisions, right? So for example, I had 100% of Palantir as my portfolio. Now I've trimmed it in the 20s because I don't see it making sense. But there's so much uncertainty and so much unperceivable potential upside that I don't want to be on the sidelines, because I see that it's a quality company at its core. I'm expecting it to be a compounder, and I'm willing to pay a premium for that. But the question is, how much of a premium does it really warrant? And I want to have my cake and eat it too. So that's why I trimmed some, and I'm staying in Palantir, and I'm not too terribly worried, even though it's a significant premium now. And we have some Twitter discussion. I don't know if you guys want to get into it, but it was really spicy on Twitter for a while, where you had these people that were really upset at someone like me and Arnie, who would welcome Palantir going back to 8.
Yo, let's talk about that. So let me introduce it. So there's definitely a segment of every retail community that's like, you shouldn't want the stock to go down because your argument is like, I want to get more of it, and I think the long-term potential is fine, so I want to buy now. Where there's another group of people that's like, that's stupid, buy it if it's high, buy it if it's low, always DCA, and hoping for it to go down is like weird, because you should always want it to go up. You should just keep buying it even on the way up. So what is your response to that, Amir?
Here's my take, and this might upset a lot of people. So being on wanting the stock price to moon tells me one of two things. Either you are looking to exit, which in case it makes sense that you would like the stock price to rise, you can make your exit, or you are very insecure about your investment, where you need the confirmation bias, where the stock price goes up, so you can say, oh, I was right, good. And the issue here is that many investors, unfortunately, will echo whatever their favorite YouTuber is doing. It means that they don't have their own conviction. They haven't done their own research. They don't have their own view of what is fair value, what is expensive, what is undervalued. They will just echo whatever a YouTuber has told them, and it makes them very insecure about holding it. So if they don't see that gratification of the price going up, then they get very nervous. So I would put the people who are insistent on seeing the stock price moon in either they want to exit or they're very insecure, because there's no other reason not to welcome charging a significantly smaller equity risk premium, which is your expected return on top of the risk-free rate in valuation. So you have a lot of more margin of safety in your investment the less equity risk premium you charge. So you should welcome a lower stock price in every case. I don't care. If I'm not looking to exit a stock, I will always welcome the stock price crashing. And these people that get very nervous, I think it's one of the two aforementioned cases.
Do you think the reason people, the reason the argument is you shouldn't want the stock price to collapse is because these people essentially don't give a shit about valuation? Right? Because if you keep buying it at 20, keep buying it at 15, 12, it's essentially your base. And Warren Redlick, big Tesla guy on YouTube, I had the same conversation with him. I said, so what's a good entry price? And he was like, there is no entry price. He's like, you just buy Tesla because it's Tesla, and you wake up in 10 years and you make money. And I was like, but obviously the people who bought it at 400 are like, they're fucking screwed right now. It's really bad. He's like, no. You just keep buying it, right? Like his concept of valuation didn't even exist. So do you think valuation is missing in this discussion when we talk about it? Because valuation dictates a good price, right?
I wouldn't say that it's people necessarily not giving a shit about valuation. I think it's people not understanding it. I think a lot of people that we interact with, they simply don't have the understanding of investing to such a level where they could make that call. So not giving a shit is not the case. It's more like they don't understand it. So they don't understand the dynamics. They don't understand what the stock price implies. For example, I watched the Palantir Weekly where Arnie did a reverse DCF. Like, okay, what is the stock price implying? And people just couldn't grasp the concept. So I think it's more not understanding it rather than not giving a shit about it.
Yeah, the comments, a lot of people were confused about how Arnie got to that number. And it's like, understanding the metrics that go in. And I think valuation is hard. Look, it took me 2 years. I still don't fully understand valuation.
Yeah, you go to people. I had, I posted the PayPal community DCF, and someone told me, no, this is only worth $50. The community DCF said 120. So I asked him, okay, but why is that? Can you show me why? He said, no, look, the stock price is not moving. Fintech isn't moving. I'm like, okay, thank you. Now I can safely disregard your comment in its entirety because I gave you the benefit of the doubt. You could back it up with numbers. You could back up your arguments. You could have well-grounded discussions with me so that I can understand your perspective. But it's more like he doesn't understand. If you got someone that says, well, Palantir's fair value is around 12, I would say, or around 15, around 18, and you ask them why. They can't tell you why. At most, they would say, well, this YouTuber said that's fair value, so that's also what I think, at most. So I think it's not understanding rather than not giving a shit.
I agree with everything Emir said. Go ahead, Vincent.
I just want to say that I think that there's also confusion on a lot of retail people who are newer on what type of investor they are and why they're buying a stock. And they say that, we're long-term investors, but we want to buy the stock and tomorrow it has to be $40. Like you can also see in the comments that people want Palantir to be $30 next year. And the truth is that we have gotten extremely lucky with Palantir this year, that it went up 200-something%. And to be honest, when I invested in Palantir in the $8 ranges, I would be happy with an average 20% per year return. Actually, it's not even that I would be happy. I would be ecstatic and think that I have struck gold if, 5 years from now, Palantir went up 20% every year. And there is a big chance that Palantir is going to rest, or maybe we go a little bit higher, and it's going to do like Tesla. Like Tesla mooned between 2019 to 2021, went to $400, and now we're 3 years later, and it's still in the same price range. And because I'm a long-term investor, I knew going into it that like this is my time horizon, and as long as I get a 20% per year return, then in 5 to 10 years, the stock needs to be at this point for me to be happy. And I would be happy, or I wouldn't be disappointed if Palantir stays 20 for the next 2-3 years, and then it goes back into this trajectory. But that's because I understand why I bought the company and what kind of investor I am. And if you're a trader and you have a smaller time frame, then yes, you need to think about like when you trim and yeah, I did a Joe Biden moment. You understand all these things.
There's also the common recurring argument that, well, you can't just make a valuation of a company. You would miss Tesla every time. You'd miss Amazon. And sure, while you would miss Amazon because they had a complete overhaul of their business, like there's no way to account for that. Even if you bought it as a bookstore company, it's not like you expected them to turn into the juggernaut of tech that they are today. But the same can't be said about Tesla, because it's a matter of understanding the business. You could understand Tesla's business. You could understand what their goals were, where they were going, just the same way that you can understand Palantir and what their goals are and what they're doing. You wouldn't miss Tesla by performing a valuation on it if you understood the business. So that argument doesn't really hold up, in my opinion. I'm curious to see what you guys think about that approach.
Tesla in 2018-19, if you look at it backward, I mean, it's easy to say that right now, but in terms of multiples and the real potential growth, by looking at that now, it was actually cheap. I mean, it was burning cash. There were a lot of uncertainties, but it was not expensive just before the famous 10x or whatever. I would like to underscore the comment, Vince. How can you be ecstatic for a 20% CAGR for 5 years? And to say, guys, sometimes I feel that these last years gave people unrealistic expectations. 25% per year for 5 years is like 2-3x the return of the S&P 500. And let me say another number. If you look at the compounded rate of return of Charlie Munger, RIP.
Thank you. Yeah.
He was compounding at 20% CAGR. So that number alone is enough to make you a like the legendary investor if you can keep it for long. And to connect again to Charlie Munger, he answered exactly what Emir asked. Okay, but if you're holding implicitly, it means that you're actually buying it, like you would be happy to buy it now. And what he did is he bought Costco ages ago. I don't know how much he compounded bagged on that stock, like a lot, because he had it for more than 20 years or so. And does this mean that he needed to keep adding? No. He bought it when the price was absolutely asymmetrical for him, even if it was maybe a rich valuation. But Charlie Munger used to buy things when they were exceptional and not overpaying. So a different approach. And we can argue that maybe with Palantir we are in that situation right now, maybe. But the key point is, okay, now Costco is actually expensive. It's not rich. It is expensive. And he says, I love Costco. I would buy a lot of Costco. But right now, the valuation is not appealing. And why is not selling if that? Well, tax reasons. That impacts a lot because that basically kills a lot of compound wealth that you can keep compounding, maybe just a lower rate if the stock is already expensive, but it would be not have a sense to actually cut it. And the second is, but if a company is truly exceptional, maybe is a little bit richer now, let it compound. And this doesn't mean that you actually buy the stock. So with Palantir, I'm in that situation right now. I want to have it compound. I know it is not a price that I'm eager to buy, but the consequences of potentially saying, okay, now I say goodbye, but the story really unfolds could be detrimental. So that's why
And
I
also-
prefer to be ready to buy, but I'm not willing to buy right now.
Yeah. Also, I want to say that how many hours of study have you guys put into Palantir? Because for me, like to sell this company because I feel it's overvalued and wait for a lower price, it's like I've put in hundreds of hours of research before I bought Palantir, you know, and I don't feel confident if I would sell it. What am I going to buy? Like I don't have another company that I don't have a full position in where I could deploy this money confidently. And I feel that like it's not part of your, like, I think the reason to sell Palantir, it's not a price, and it's the same both up and down. Like if you know, if we bought the stock at $8 and it would have gone to $3, would that be a reason to sell? No, because the thesis is the same. You know, it would be a reason to buy more. And if now the price goes to, you know, 25, is it a reason to sell if they're doing like fantastic with AIP? No, let it compound, sit on it. We anyways bought it for, at least I did, for the next, you know, 10, 20 years, and just let it compound.
You know, I'm not too bothered by that. My time horizon is my lifetime. I've studied companies for hundreds of hours.
Yo, that we got to get that on a shirt, bro. My time horizon is my lifetime.
Well,
that's a long-term investor type of shit, right? That's dope.
No, but let me explain. So I have studied companies for hundreds of hours. I love the company, but I don't own them yet. Why is that? Is that if I would be impatient, like, oh, this is great, I'm gonna buy it now. Like, no, that's not the way I view it. I'm in no rush. I have the rest of my life. I have a family now. I have a kid, so I have to be responsible. So I will keep tracking a company that I'm interested in, and I don't have this sense of impatience to enter at any cost. So look at FICO. If you pull up a chart of FICO, like, when would you buy the dip in that? It's been going up and up and up and not doing anything but going up. But I know that the time will come when I can enter FICO more heavily. But just being patient, just waiting for the quality companies to come down in price, because it does happen. We have Meta at 80. If you told a person that's interested in Meta 2 years ago that, well, it's going to drop to this valuation, they would be like, no, it's not going to happen. So the times will come. I'm patient. I'm not in a hurry. If I don't have a place to put my capital, then I won't. I mean, I think I'm not of that mindset.
I think the one thing that we continue to kind of forego in this entire thing is that Palantir is very good about, I don't mean this as a pun, but bootstrapping their way into creating additional products that I don't think people really understand or know that they need yet. And so look at what they did with the federal, was it FedStart? Look what they did with a lot of these other things that they're kind of at the forefront of being able to help supply. AIP, I think, is just another brick in the foundation in which Palantir is building. And I think you're going to realize not only are other people going to fail in terms of being able to provide value to enterprises, like what's going on with Microsoft and Fabric at the moment, and what's going on with other companies like Snowflake trying to provide software that's good enough, but not good enough to actually change the trajectory of companies. I think that people will eventually start to understand that this isn't something that you can truly value in a typical manner, because at any given day or month or year, they can release another product just like this, like we saw with AIP, and it completely changes the game. And I think that they will probably continue to release more and more products as we've seen them release 2 big products this year, one being FedStar, one being AIP, and I think another piece will probably come in the next 2 to 3 years that we haven't even thought about yet. I mean, we've already talked a little bit about the VR space, which Palantir is trying to get into. We haven't even started to talk about Titan. Hell, we didn't even talk about the NHS deal today, which came out last week. And I think that that's just a beginning avenue to see what this company can truly do if people want to dive deep into the future revenue streams and future potential this company has. I want people to recognize that, yes, this company started in 2003 as a test bed for creating a company that is a generational, once-in-a-lifetime organization, right? This is Peter Thiel's Tesla. This is Peter Thiel's SpaceX. And he didn't just start it on a whim to try to make a little bit of money. He started it to potentially change the world. And with that, I think that they truly started to decide back in the 2015, 2016 timeframe, okay, this product and what we're developing here is good enough to start selling to the consumer and start selling to normal enterprises and not just the government. And look how far they've come in the last 5-6 years to be able to grow, and how fast that they're starting to truly come. And they're giving it away for free in a lot of cases with respect to Ukraine, with respect to what's going on in Israel, with respect to what's, all the different things with the pandemic and helping worldwide associated with the vaccine rollout. Who, when anything, and let's just be blunt, shit hits the fan, does the world turn to, especially the Western governments turn to, other than Palantir? And they're not going to Microsoft to handle these things. They're not going to Google to help them get out of Afghanistan. They're not going to Amazon or the AWS folks to help them with the helping of Ukraine on the ground. They go to Palantir. And I think that they don't realize it yet. And I think a lot of people that might even watch this and might be haters, whether it's on X, on YouTube, truly don't get it yet. I get it because I've used the software. And I don't even know literally 75% or 80% of its capabilities, but I can still see how it's completely revolutionized what we do in my business. And I can only imagine what it does if people truly embrace it and embrace the culture of Palantir into their own businesses.
Mm-hmm. Well, culture and the ability to create new products, I believe, is the true key to have what is called sustainable growth. Because you can have a lot of growth because the industry is magically on hype. You look at M-Phase and so on. But what truly makes the difference between a generational company like Apple, Tesla, and so on is the ability to recreate themselves. And what I think is truly fascinating of Palantir is that if we go back 1 year ago, so let's move back in the past, and what we had last year is completely different from what we have right now. And I would say that the rate of change, so the rate with which the company evolves, is far more important than the actual speed. So far, in terms of revenue speed, as we mentioned previously, Snowflake, Databricks are actually growing faster. But are they actually having a rate of improvement that is actually better than Palantir? Frankly, I would say no. At least my intuition tells me that Palantir is evolving way more and actually has that component of sustainable growth that is achievable thanks to the culture that is the key core ingredient needed. But with that culture, you develop products that can create new products. And I believe a very underrated aspect of Palantir is exactly what Matt said. Palantir creates software to create software. That, by definition, put them in a situation where potentially where software is, they can solve problems. And therefore, the TAM is the total addressable market is almost infinite, as Karp said. Now it is a matter of execution. Last year, I would say we were in a situation where the company was truly cheap. Well, was cheap given what we were getting, but what we were getting was still a lot of potential not fully expressed. Right now, what I see is that potential becoming in reality. And we have been seeing that with the financials. But look at Shyam. Going back to the initial part of this Palantir Weekly, Shyam today is no Shyam of 3 years ago. It's a completely different kind of managerial person, way more expected, way more posed. I was skeptical of him. I love him now. So all together, I would say Palantir is evolving. The others are just surviving.
Can we?
Let's do NHS. Yeah, let's do NHS.
Okay.
Amir, we got the NHS deal. The deal was not as much money as we expected, and we have all these other fucking consulting firms that are taking a piece of the deal. So, what were your thoughts on the deal?
Okay, I'm gonna take a minute. Sorry if it's lengthy, you can stop me. But yeah, as you mentioned, people were a bit disappointed in terms of sheer contract size and how it's split between several beneficiaries and partners. But there are some really interesting dynamics that can be taken from this procurement. You know, when I value businesses and when I look at monopolies, duopolies, I get a lot more interested if they're logical and natural monopolies. And what I mean by that is that you don't need to coerce others into your products. You provide such a value add that others willingly seek you out, as opposed to issuing, for example, enterprise licenses for a product suite that's unrelated and then coercing the client to pay up for your other product that might not be as good, but you're already invested in their ecosystem, so you might as well. Those types of monopolies make me uneasy and are not ones I'm comfortable with holding because I don't think it's a sufficient moat. So going back, what evidence do we have from the NHS? Well, first of all, they were fighting tooth and nail to ensure that Palantir gets accepted by the general populace in the UK. We witnessed some of the most sinister and widespread opposition from various news outlets, misguided citizens and executives. Despite all that, Palantir still procured the contract, even though it could have been seen as political suicide for the administration there. And it can be traced back to Palantir's DNA. They offered their products for free to the NHS in relation to the COVID outbreak. And they used it for a time, albeit in limited capacity. And the value they were shown made them really highly sought after. And here we are now with the contract. I mean, they laid the groundwork for mass adoption of Palantir. I mean, different healthcare systems surely have been eyeing how this major procurement would conclude, especially given the controversy surrounding it. I mean, I work within the public healthcare system in Sweden, and if the NHS procurement process is anything like ours, then it's anything but simple, and this is a huge milestone. The implications of this are way beyond just the contract value, and I think investors should try to understand that.
Yeah, I mean, this was a big one, getting the deal. I think my big thesis on this was at least we got the deal. That's all that mattered, regardless of the specifics of it. Vince, do you think this deal is going to open up a lot more deals in the future?
Definitely. I mean, I was never excited about the deal, the NHS deal, for the stock price. Like, I saw so many people were waiting for the announcement because it's going to pump the stock. And I always thought that this NHS deal, like, if we think about it, we started in 2020 with COVID, like giving the Palantir service to the NHS for £1. And then from that point, it took all the way almost to 2024 to come to like a bigger contract with the NHS. And so I was never excited about, you know, the stock price and financially what it brings. But as Amir says, it's a very big validation that you can trust a US spy company with your country's healthcare data. And I think that if the UK had these objections, a lot of other countries are having these objections. And if Palantir, so step one was getting the contract, and step two is like now they better, deliver very, very good results. And if these two are together, I think we're going to get a lot of other contracts from other countries, sorry. And it will be much easier to get it because there is a precedent of another country that is other than the US that is trusting them with all the private data. And if those data don't show up on Facebook and it doesn't get sold, it will be a huge, comforting factor for these other countries, which is ridiculous for us, but it still has to play out for, the other countries to see.
Arnie, your thoughts on NHS?
Look, the NHS, from what I read, is the 5th largest employer in the world and the largest non-military public institution. What does this mean? It means that acquiring the customers, having the trust of that customer is actually far more important than the actual dollar amount. Then, be that 330 rather than 500. Actually, in my opinion, it doesn't really matter. Like, I would be happier, obviously, if a bigger amount. Now, we also have to consider that Palantir doesn't get it all because there is also Accenture and some other minor partners. Okay, fine, less money for Palantir. But who's the face of that contract? Palantir. So that is what truly matters. I believe if we are true long-term investors and not people who need that 5% in the stock price to feel gratified because, okay, let's say right now Palantir, rather than being at 20, would be 21. Like, would that really change something for a long-term investor? Not really. So the publicity effect of this deal, in my opinion, is far more important than the actual direct revenues. I think I mentioned it many times, so I don't want to repeat the same soap all over again. But the secondary effect of this deal is you get recognition all over the world. So now imagine Canada, Europe, having a president, as you said. And why this changes everything? Well, we already discussed it. So I was going to say something else, but now disappeared. So that's it.
We are having this Biden moment. It's too early for us.
All right, Matt, you ended off for us. How big was the NHS deal to you?
I agree with a lot what Vince said. I think one of the few tweets that I had after the NHS deal part was the continued success that we're seeing in healthcare that we've seen, obviously, in the United States, coupling now with the UK. I think it's a stepping stone into the rest of Europe. I think it's a stepping stone into Canada. I think it's a stepping stone into a lot of other potential industries as well that can be kind of taken down. And with respect to the piece that they have to share some of the revenue with other people, look, that's just reality of business. When I work on an oil and gas project, I'm not the one sitting out there drilling the wells, right? We call in Halliburton, we call in Schlumberger, we call in Noble Drilling, and they're the ones that are helping execute and do some of these things on their behalf, right? It's the same exact thing. You're not going to get upset at Palantir for calling up AWS and say, hey, by the way, we just got this big contract with the NHS. We need your cloud services, right? So at the end of the day, that's just the matter of business, right? Let Palantir focus on what they're good at, which is creating customizable software for the modern enterprise and fixing modern solutions. And you'll have the Accentures and PwCs of the world that make sure that it's all kosher and everybody's following the right rules and setting up the right framework, right? So I think at the end of the day, if you're just sitting there saying, well, not every dollar is going to Palantir, it's like, well, that's going to be inevitable, right? Google and Microsoft and Amazon, they're all eating off of Palantir. And that's just the nature of the beast. But what I think that you can recognize is once again, Palantir is becoming a brick in the foundation of Western success. And that's really what they're setting themselves out to do. And I'm curious to see what contracts we're looking forward to next. I know a lot of people are talking about Titan, and I'm sure with this, it's just going to be an avenue for future success for Palantir, and I'm excited to be a part of it.
Well, a couple of considerations I got out of my Biden moment is that Palantir is a software to build software. And if Palantir can actually help the NHS build this huge infrastructure, guess what? That could be potentially used to deploy that into another state. And we know that Palantir had a lot of opposition also in the parliament, and even Rishi jumped in and said, well, we gave this contract because the tech is proven, and we have proven that it works safely. What that tells us? I like to look at this kind of information, cool for the dollar amount and so on, but what is the signal of Palantir actually getting this deal? To my eyes, to my simple eyes, is there was a very adverse incentive to basically, there was the incentive not to give Palantir this deal. Why? Like, if you're a politician, you are committing a political suicide, basically pushing something that is US, spy, controversial, like the combo of the three things you don't want to put your label on. Like, remember, the job of the politicians is to get elected. So something that is for the long term is not something they would be really willing to to accept unless truly works. So proven tech is the keyword, and it is proven thanks to the 3 years of work that validated, hey, what Palantir is doing actually works. And my gut feeling is what Karp says in we are ahead, our product works 10x better, and so on, is actually validated by this. Because look, if you're a politician and Palantir is just slightly better, you don't get, you're not encouraged to afford the risk, the political risk, unless something like Palantir is truly 10x better. You don't do that. Maybe I'm overstretching here. I would love to hear your opinion, but that's the signal I have.
Yeah, it's the same that I mentioned. And if you think about it, they were really desperate to make sure that Palantir wins this procurement deal. And just looking at what they're doing and how they entered that position, as I mentioned, they were basically given to the NHS for free a few years back. They showed the value, and now they're really, really desperate. They're jumping through hoops, going over hurdles, everything to make sure that they get Palantir, even though it might be seen, as you mentioned, political suicide. And then you think back to, okay, but what are they doing with AIP right now? They are essentially doing the same thing. They are giving it out essentially for free, providing the value in a very hot market. I mean, there's no shortage of solutions for companies to adopt that's perceived to do the same thing, even though in reality that might not be the case. But they're really making sure to push this to the most influential, the most powerful companies, and securing them within their ecosystem, showing the value, making sure that they're gonna in turn pay up for that value later on. So I think it's a really smart strategy. They're not strapped for cash, as we've talked about. They have significant organic responsible growth. They have no issues with their balance sheet, essentially no debt. They have a lot of cash. They can employ this strategy, and I think it's going to be very effective. And just predicting the scalability of it is very, very interesting and exciting for me.
I agree.
I think there's a chance also that this fight in the UK, because think about it, it was in the news that because there was this drama around the contract, it was constantly in the news that, you know, the spy company is going to get this contract, and you know, it's dangerous and this, that. And I'm sure that other companies and other officials are also looking at this, and then they read the news that, oh, they did get the contract. And then I think that it makes them think like, okay, there must be something here. Okay, we need to check this company out, as opposed to like if there wasn't anything from Foxgov and it would have just slid through the news, then so I think we can thank Foxgov for a big service that they. I mean, think about it. When you know, when there is these army contracts that we win in the US, it's never even in the news. It's some of the, you know, the most nerdy Twitter followers that spot it, and then it's news in the Palantir community. But if you go to the average person on the street, like, do you know Palantir got this contract? They're like, who the F is Palantir, And probably if you go in the UK and you say, like, did you know that the US spy company got the NHS contract? Like, yeah, it's crazy, So I think we got some free advertisement from Foxgov, and it's going to serve Palantir really well.
Vince, I think you're right. Last year, I was at a value investing conference, and I was talking about Palantir, obviously. And people from the UK were, okay. But when I said, look, Palantir is actually on the run to get, to revolutionize the NHS, then I saw the face, oh. So it's like, that is something that they understood that could be really big because they are aware of the problems that the NHS was affected by, well, is still affected by, but more importantly, how big that is in terms of recognition.
That point is the very reason I really didn't care about the money or the other, like, it just getting that deal meant so much to not let, because we saw Germany say, screw off Palantir, right? UK could have said that. Rishi Sunak could have said that, but they were like, no, we know you guys are the ones, and we're going to fight tooth and nail to give you the contract. They got the contract. And now in 2-3 years, if they show those backlogs and wait times go down, like, I think European investors, European communities are just going to be like, what is this company that fixed the NHS?
Amit, I have a question for you, but for everyone, because I asked for you because you had the conversation with Dan Ives, and I think you touched a very interesting point with which I don't agree with. Dan Ives says, at the end of the day, Palantir is a dual-side story. The government is just the government. It's not that appealing. But the commercial, that is where the true multiples come out, because there you have the big expansion. And basically, Dan Ives says, from his standpoint, the government is just, okay. The AAP on the commercial side, so basically the commercial side is, that is where the true story is. And on my side is, well, no, I don't want to spoil. What is your feedback on this?
I mean, I think I've never said government is a bad part of the story. In fact, I've said, like, government is what keeps the company afloat, keeps the revenue sticky. They're going to do 1.2 billion in TTM from the government. So it's not that it's bad. It's that
it's just okay. It's not okay.
And the only reason I'm saying that is I think two things. The only reason I'm saying that is because international government growth is really bad, right? Like, it's almost non-existent. Whereas U.S. government growth, all of us in the chat probably know about JADC2. That could be many, many, many billions of dollars just going to Palantir alone, right? Because of how big that is. So that is exciting. But until they expand internationally and do something like fix the NHS that gets Canada or Sweden or Denmark really excited, then, international is not that excited. NATO and defense internationally is exciting, but none of those deals have really materialized as of the Ukraine stuff. And maybe they will, maybe they won't. But I think the street's not going to give a shit about any government revenue in the long term. Like, they need to see 8,000 customers, right? Like, to get like a Snowflake crazy multiple, something like that. That's how I feel about it.
You are the guys.
I have an interesting thought about it, because, like, many people talk about this, like how they value the government or the commercial. But when you look down in the actual DCFs, like if you look at Emir's DCF, I'm having a Biden moment, Oliver. Arnie's DCF. I forgot your name. It's too early. So we look at Arnie's DCF. If you look at Ariana from Bank of America, like, it's no, okay, she actually broke it out between commercial and government. But when we as retailers speak, it's always like, what's the revenue growth? What's the operating margin, and what's the multiple? Like, we never break it out. And then, so I think that action speaks louder than words, regardless of what we think of one or the other.
If I would be able to choose whether to own the government part or the consumer part, I would, for right now, I would clearly choose the government part. For one thing, it's valued way lower as a sum of the parts component, as you spoke about, Vince. But just looking at the predictability of cash flows, the contract length, the sustainability, expansion opportunities, just think about the sheer amount of legacy solutions just ripe for disruption they're virtually endless. Only selling to allies may be perceived as a limiter, but I see it as an accelerator in many parts of the world that are very regulated. There's a lot of fear. I mean, in some countries in Europe, you can't procure software that just come from anywhere. I mean, it's very regulated what's acceptable or not. So if I could choose one, I would choose the government. I think Arnie is in the same boat. And I'm not one of those that pray Palantir splits up government and commercial, because I think government has a lot of value.
I think that we have yet to see the growth that commercial can bring, personally.
I agree. It's just got to happen, and we're all along for the journey for when it does happen. That's it for us on Palantir Weekly. Amir, thanks for making your first appearance, episode 101. Hope you guys enjoyed. Everyone's Twitter is in the description, and Elon really needs some new users. Okay, he had an interesting week. So if you're not on Twitter, X, join it.
He doesn't need users. He needs advertisers.
Well, he needs people to pay $8 a month, because I don't know if these advertisers are coming back. So
yeah, okay, yeah, true.
If you don't want to pay $8 a month, at least follow us on Twitter, and you'll get some free Palantir content on the X platform. Thank you, everybody, for joining. This was awesome. We'll see you guys next week, episode 102, and we'll keep it going from there.
Matt Money 0.
Thank you.
Bye, everyone. Have a good night.
Matt.